All right. Welcome, welcome. Hi, everybody. This is the Future of Derivatives podcast. I'm Rosalie from Panoptic, and I'm joined here today by Dan from Risk Finance. Welcome.
Hello, hi Rosalie. Thanks for inviting me. Hi everyone.
Thanks for being here. Yeah, I would love to just get started and talk about your success. I know you have a wonderful product and work in options as well. Recently launched on Hyperliquid with options vaults. And yeah, I'm really curious to learn more about your whole process. I know you've been building this options protocol for a really long time and kind of had to reevaluate your strategy, your launch was delayed, just like ours, and now it's really taken off. And so I would love to know why you chose Hyperliquid and kind of what the core ingredients were that led to your success.
Yeah. Let me start with a bit of background, I guess. So we started Risk about a couple of years ago now, and the idea was to build an options protocol focusing on the trading side. So the idea was to build some sort of like options AMM where anyone will be able to basically trade options. So main challenge and assumption was basically trying to put what Deribit had on chain, different mechanism and so on. But like the idea was, can we actually make what is centralized right now into like an on-chain venue? That was actually very beautiful challenge, beautiful product to build. Like I think it was probably one of the coolest things we've done so far. But it was very hard to get traction, and the main reason it was basically lack of organic demand from options traders. So what we realize is that especially in DeFi, there are not so many options traders. The one that they're doing size and they're actually doing like volume, they are extremely sophisticated. So what they care was like liquidity and everything like that. And Deribit was a better venue for that. It was like more liquid, better execution, and everything like that. So it was challenging to basically have them migrate to a product that was objectively, on chain. It had like the advantage of being on chain, but for what they cared, that was not enough to migrate on chain. And excluding the sophisticated, it was very hard to basically get average user to just trade options. Perps were taking off. I remember, the YDX was already massive, and Hyperliquid was coming, so people were basically more used to trade using perps to basically express what most of the people want to do on this space. It's like they would like to express a view, and most of the time this view is like market is going up or down, and so they basically want to maximize that. And perps is actually a very efficient way to do it. Like you choose the leverage, you decide when enter the market. It's extremely simple, and if you get it right, it is profitable, right? So perps were basically doing leverage. It was a better way for expressing this type of view, and it was very hard to get options into it. So we can discuss a lot, probably like are options better instrument on paper than perps, and because of liquidations, because of like anything. But what happened in reality is that user didn't really care. We tried to educate. We believe with education probably people gonna care, but the reality is like it was extremely hard, and we realized that even attracting liquidity from makers, for example, market maker side, was very hard because everyone was basically doing on perps. It was easier to manage, easier to integrate, and so like it was actually extremely hard to attract liquidity on one side, attract organic demand from trader side. So again, beautiful challenge, but it was hard to scale. Um, what happened is end of last year we were kind of thinking of giving up. I was like, okay, we tried, we did our best, um, but then we also started to kind of like regroup with the team and start to think about like what did we learn over the years of building into options, and talking to users, talking to makers, talking to basically anyone. And one thing that we realize is that options might be a very good instrument for a very specific use case. So options are great because of like the flexibility, but this flexibility can also generate, like too much decisions, too much complexity. So what we thought about is like, can we actually focus on one very specific use case for options, which is the kind of like income generation out of option, right? So strategies like covered call and cash secure puts, they really widely used in markets. They used a lot in crypto, usually through OTC, so it's not available on chain most of the time. But those strategies are there and they have a reason to be there. As an example, when you do a covered call, it means that you already hold an asset like, I don't know, BTC or ETH or IPE, and you can earn a front income out of it, right? So it's basically a cash flow type of strategy that it's not a trading strategy. It's more of like I have asset and I'm trying to generate income and cash flow out of it, right? So what we've done is that then we actually focus only on this very specific use case, which is like kind of like the income generation aspect, and can we abstract all the complexity of the options away? So you as a user, you don't have to think about, like all the complexity of it. Like we abstract everything away, but we still give the user the decision on effectively like the kind of payoff that they want to build. So that was kind of our idea. And it was like, I'm pretty sure there is no alternative out there right now to have a very simple, accessible way to generate this income using options, but in a way that, again, is very accessible to anyone. So we basically decided to focus only on that. And we designed this new product, which is obviously the result of like years of learning and building, but it's effectively optimized just for that. So the UI is very simple. We show the user only two expiries right now. At the beginning, we are only at one because we didn't even want them to decide the expiry. It was like, okay, only end of the month. That's it. And we show them only four different strike prices effectively. And the idea was we just give them lower amount of decisions. And then as soon as they click a strike price, it was an RFQ system. The RFQ is basically getting a 2 seconds auction. And the counterparties were bidding. So you as a user, you can see the best price that counterparties are willing to pay upfront in dollar to open that position. And then it was very clear the way we also explained the payoff, which is if for a covered call, for example, if the price is below what you selected, you receive your collateral back and you keep the premium that you earned up front. If it's above that, you still keep the premium, but you receive basically USD, effectively acting as a take profit. So for user, it was extremely simple to think about this product. It was like, okay, I'm opening a position, and what happened at the expiry, if the price is above that, I'm effectively selling at a higher price, and you send me the USD. So that was kind of like the mental process that we had to design this product. And what we realized as soon as we launched this, user were using this in a two-way. Like the main way was I'm willing to sell. So this is a good price for me to sell. I'm happy to do it. And in the meantime, give me the income. Or the other use case, it was more of like kind of the, bet or speculation aspect out of it, which is I don't think it's gonna hit that price. So I'm pay me upfront the income, and I'm making the bet that I don't think it's gonna hit that. So I will receive the collateral back. So yeah, that's how we basically started. And I think our users, I talk to a lot of them now, and most of them, they actually never traded an option before. Risk was the first time. And even with risk, we, when I talk to them, like they don't even feel they're trading the option, because in reality, it is, an income strategy. There is not even a secondary market. Like once you open the position, you have to go to expiry. So it's not like a trading where, I open and close, or I do P&L on the trading of the option per se, but it's more of like, okay, I'm going to the expiry with this very specific strategy. So that was the idea behind it. And before we went live, we announced the product, and we started to see a lot of inbounds from the Hyperliquid community. So that was, to put it in time frame, that was like early 2025. So we're talking about like February, March, around that time, we announced this new product. It was basically on a test net, and the Hyperliquid community, they were like, oh, you guys should launch on Hyperliquid or on HyperEVM. because we believe it's going to be a very good opportunity first to earn on top of hype if you do covered calls, but also because the community of Hyperliquid was incredibly sophisticated somehow when it comes to like trading, because there were actually traders on the Hyperliquid ecosystem. So they were not looking for another trading venue, but they were actually looking for a way to earn yield or income on top of the asset that they already hold. And they realized that Risk was a very interesting product for that. So we got a lot of inbounds from the community. And at some point, when you receive a message from someone, it's like, okay, whatever. But like when you receive 10 DMs or like 20 DMs from people, you're like, okay, wait, maybe we're into something. So we actually launched on Hyperliquid, or on HyperEVM, to be clear. And one of the reasons why we launched on HyperEVM is because the way Risk work is when you do the covered call, someone has to basically buy the option, right? And we have an RFQ system. And on the other side, we had basically options traders. And at the beginning, as we started, we didn't have that many. And it was mostly like kind of like nerd traders of options that they were like, okay, I like to get some of this flow. And the best way to hedge, it was also to use perps. So it actually made a lot of sense to be on the Hyperliquid ecosystem, because those buyers were basically just buying and hedging straight away using perps on Hyperliquid. So it was actually like a very easy ecosystem integration, even for our counterparties. So the answer about why we went for Hyperliquid, it was definitely a community demand opportunity, but also like an ecosystem where you have derivatives and you have all that infrastructure, and Hyperliquid is one of the most liquid market for perps as well. So it was actually very easy to potentially edge all those instruments on the ecosystem. So that's kind of the story. We launched at the end around late May, early June. We started small, like with a access code, and we wanted to test everything properly. And so we had the first few months of basically like a lot of demand, even more than we could even take, because as I mentioned, like we didn't even have enough buyer and so on. But that helped us to basically validate the idea. I was like, okay, what we are trying to make here, which means options as an income strategy and make them accessible, is working. Like there is demand for this. And so since then it was like easier to get more buyers, and the pricing got more competitive, and then we were able to basically grow and scale. And last month, only in November, I think we had something like about 60 million deposited in 1 month. So it's been like consistently growing. And now a metric that I really like is we measure the retention, which means how much of the basically deposit keep coming back every month from the previous month. And the thing in November was something like 70%. And for a product like Risk, where we have expiries and so on, that's insanely high, because basically like what happens is like when we have expiries, we settle the position, we give the money back to the user, right? So you have to get back and you need to open a position again. Like it is very active type of platform, and we didn't expect to have like such an high TVL basically retention. So 70% is basically coming back every month, which I think is extremely high, and something that we're very proud of as a main metric that we look at. So yeah, this is kind of like the full story on where we started and where we are now. But the TLDR is, I think we finally made the option strategies accessible with a product that effectively wasn't even existing in DeFi, and people liked how simple it was, how accessible it was to actually generate income out of like volatility and using options as an instrument. But something that I like to always stress out is like we're not an options trading platform. Like if you like to trade options, it's not Risk probably the right platform. It's like it's extremely optimized for a very specific options use case. And that's the reason why I think it took off.
Yeah, that makes sense. I think definitely options are really complicated, and these vault strategies help a lot, break everything down and make it really simple. You mentioned a lot of different things, and I'm curious, a couple of things that you mentioned. You have covered calls and cash secured puts. What about long optionality trades? Why did you choose? I guess there weren't many buyers at the beginning, but are you considering these trades now for the future, or are you going to stick to just those two that you have?
Yeah, so right now is only covered call and cash secure puts, as you mentioned, which is the concept of that is I already have an asset, which is for covered call, it could be, Bitcoin or IPE or even like, stake IPE or whatever you would like to earn on top of it, right? So that's the very simple use case for covered calls. For cash secure puts is very similar, but on stable coin. So you have a stable coin, you're willing to earn on top of that, and eventually you're willing to buy the asset cheaper. So, for example, a strategy that is working really well recently is cash secure puts on BTC. So people are like, I deposit stable coin, I either get whatever, like 10% APR. Let's put it this way. This is like one of the most APR that I see, the most common one. So people are like, I'd rather have a 10% APR, or I prefer to buy BTC at a cheaper price, because in the long term, BTC is kind of the base asset. So those two strategies, as you can see, like they're very simple, but like very specific use case. And for now, we have basically more demand that we can even take at this point, and we're trying, to get even more buyers and everything like that. So we think that we're gonna double down into that, also because we see an opportunity in the space, because basically no one else is covering this market right now. Is completely untapped. Most of the power user before race day were either not doing it, or they were doing like OTC with option desk and so on, which is definitely not an accessible way. So we still believe there is a lot into this that we can double down. But for other strategies, or like even other options trading, for now we're probably not gonna launch them. At least not the basic like long call or like long put, whatever. Maybe we're gonna do like some other, like, again, strategies for income generation and so on. But like for pure like optionality, we're not gonna do that. For the main reason that I mentioned earlier is like we still see that as a trading kind of behavior, right? Like when you long a call option, like you are making an assumption, you're making a direction view of the market and so on. So we believe that that's a different use case of what we have today. We believe that you can express a very similar, probably not as good, and again, we can argue for hours about, but we can do a similar thing with perps, which are like way more liquid, easy, and so on. And the other complexity that we see about that is like how hard is also to gather liquidity for those type of positions. So we know that it will be very hard to actually have a very efficient market on that. So for now, we're doubling down on the concept of income generation strategy using options. Yes, we double down into that. But like for trading optionality and so on, we believe that we might not be the right place to do it. In the future, we'll see. I mean, as you know, like working in this industry, like you can get feedback from people and things can happen. But as of now, I think we're just gonna double down on what we have.
Okay, that makes sense. How do you think an RFQ system solution difference from using AMMs or clubs, and why did you choose to go with this more auction looking process?
Yeah. So the RFQ is the reason why we went for an RFQ is basically mostly about like efficiency to attract liquidity. When you think about options, one thing I always like to think is, imagine you have an order book, right? Now, if you having an order book on a perp exchange, you basically have an order book for ETH, you have one for BTC, and basically it's very easy to attract liquidity and fill that book. When you have to do the same with options, you need an order book basically for each strike, each express, each put, which means even for it, you probably gonna end up like having 100 different order books, right? So even to build that infrastructure from a market maker perspective, it is extremely hard. Like they need to make sure they provide liquidity for each book. It's a matter of like you want to provide like deep liquidity on each one, and pricing options is hard. It's like different. I wouldn't say harder, but like it's definitely a different mechanism. The pricing a perp, right? So it requires some complexity and everything like that. So order book, it's on paper is very good, but like actually when you think about options, like having a very efficient model with an order book is probably extremely hard. And my view, even looking, at other order books out there for options, like at the end of the game, it might be unsustainable with the current market conditions. So if you don't have, like the organic demand on the buy side to sustain the order book, basically you're gonna pay too much to attract that liquidity. In our case, the RFQ was way simpler. Like even with our counterparties, simple as like each time you're gonna see what the users want, and you're willing to make a bid for that, right? So it's not that you need to be there providing liquidity 24/7 on all the books and everything. It's more of like at some point someone wants to, sell a covered call, and you price that, and if you have the capacity, you can do it. So it's kind of way more capital efficient. It's just based on request. Plus, the thing about RFQ is, for example, for risk, we have some very exotic kind of instrument, right? So, for example, we have a covered call collateralized by PTKI, which is a pendle position basically collateralized by KI, which is a staking on HYPE. Those positions, like they had like some good demand because people were basically using a lot Pendle, they received this token, and now they can use this token to write covered calls on top of it, right? But if you want to do an order book, for example, with that, it is again like extremely hard to effectively attract all the liquidity for those more exotic asset or position. So we see order book also a better instrument in the future for more exotic asset and everything. So I think for options, RFQ is probably a better execution model, at least for like DeFi options and for where we are today. Maybe things gonna change in the future. AMM, it's we built one in the past. I think the problem with AMM is still very similar in terms of like if you don't have enough organic demand, you basically ended up taking as an AMM only a flow from sophisticated users, right? So, and at the end of the game, you need to figure it out a mechanism to get an efficient flow. If this flow is not really efficient, like you ended up basically, being always the counterparty plus options book, or like an options AMM. It is very hard if you want to hedge. You're just not hedging delta. Like it's more complex. You need to basically all the hedging is a full structure. So having an options AMM, and like the way risk used to work, it was very similar to GLP. Basically, we were pricing options, taking off the flow, and then trying to hedge using perps. So that was like very hard to also manage, and a lot of operations and everything like that. So we believe RFQ is actually, again, like probably the best execution for what we have as a product, at least for us. Like maybe there are some other options product out there with different needs and different mechanism, but for us, the RFQ was the right design.
Okay, that makes sense. What do you think kind of was the biggest thing for your success? Do you think product design and the simplicity was really what pushed everything forward, or do you think it was more about culture and marketing and the Hyperliquid community?
Yeah, it was a lot of different things. Definitely, Hyperliquid community had a very big impact. I think there was a good product at the right place for the right people. I don't know if risk on another ecosystem will be, as successful. Probably yes, probably no. Like, we will never know. But I'm sure that being on Hyperliquid at that time really helped us out because the community wanted to try something new. There were DeFi power users, all of that community. they had asset. Hyperliquid had a massive generation, wealth generation event. So they had asset that they were like willing to spend or like put into products that, they were solving some of those problems. So I do think Hyperliquid at that time was, the right place. So definitely they helped. But I think now that, we've been now what happens at least in the last few months, for example, November, when we grew a lot. And what we realized is like actually new users from other ecosystem breached into HyperEVM to actually use Risk. So we went from by being like, an Hyperliquid native type of product into like now people want to use that from other ecosystem, right? What we realized that for them was mostly different reasons. Like one of them is definitely the how easy it's not just to use the product, but to understand the outcome. Like people, we never heard a single user complain about the outcome. It's like I click this button and I exactly know what's gonna happen. Like at Expiry, if the price is there, I'm gonna get this or the other thing. I think the way we made the outcome like so simple and easy to understand was a key. Plus, I think for people was actually a very good timing as well, because yield is probably one of the main use case of DeFi, and they realize that, like on asset like Hype, for example, there are not many opportunities to get more risk reward into the curve, right? And with us, like with the volatility, they could get basically more of that. So people were like, okay, I'm willing to take more risk, but I also want to get, higher yield or higher APR. So that was probably also something unique, and people were not able to do that anywhere else. So even offering them something new, easy to understand, very easy to understand the outcome on an ecosystem where, people, the users had funds and the community was, the Hyperliquid community was like very easy to like even try a product like this. They were like, okay, I know what's going on here. I like this product. Let me use it. Let me try out. Let me give you feedback. For example, we as a team didn't believe cash secure puts was an interesting instrument at the beginning. We went only for covered calls. We thought about cash secure puts and we're like, nah, I don't think it's gonna be like interesting. And then people from the community, from especially Hyperliquid, they were like, yo, I want to do cash secure puts. And again, when you have one person, it's fine. When you have 10, it's like, okay, wait a second, let's do it. We launched that, and I think in November was actually the most used instrument was cash secure puts. So that's why, like, I think the right community definitely helped in terms of like feedback and success, but also the right product, because I think it was definitely a product well designed for that ecosystem.
That makes sense. What do you think is kind of standing in the way of options taking off in DeFi? Do you think it's too complicated, and like you mentioned, people just hedge with perps, or do you think that the hedging vaults and these kind of new structured products are going to make a difference there for options?
Yeah, I think there is a market for options. I think the main thing, at least in my view, is not to use them as the way we think people are using them. So when we think about Deribit, it's like, oh, people using options because they want to trade and take a view and so on, which is fine. And I think there is definitely enough of a big market out there. But I do think that the innovation that I'm seeing into options right now is actually on the opposite direction of options are great, but we need to find a use case for them, very specific, and we don't have to give all this flexibility to the user, because at that point it gets basically like on the opposite. It get like too many decisions, and it's get confusing. So I see protocols using options on the back end, like us, where that's for income generation. There are products using options like prediction markets, because at the end those are options, and people don't even know that it's an option, but it's a very simple way of expressing the view. There are products, using options to generate some sort of like delta neutral strategies, similar to basis trading, but with options. So I do think there are use cases, and and they will take off because options are a very powerful and good instrument. I do think that there is a market into options for more institutional or like sophisticated actors. Those actors today, they do it mostly like OTC or bespoke type of options. I do think that there is a market for them. It's a matter of making sure, for example, for hedging, I think there is a market for sure. It's just a matter of making sure that we build products that they are attractive to them, because those actors might be sophisticated, they might look into like liquidity, and they want like certain things. So the problem I've seen in the past is like, and the Risby one was one of them, is like the products were good, but not good enough to let people switch from something like Deribit. I don't know where Deribit is going to be. This is a question mark. Like, they got bought by Coinbase. They might be great or they might be bad. We'll see. Maybe there is an opportunity there. So I think it's good, but my personal view is more of like, we need to find use cases for options to enable something that other instruments they don't enable. And again, like for example, the yield upfront that we offer to our user with covered calls, like you cannot really do that with perps, right? So I think there is a market for that. I think those are like the beautiful use case. But if we keep targeting and say, oh, instead of trading a perp, you should trade an option, I think that's the wrong assumption and like market proposition for options.
Yeah, I definitely agree. What do you think kind of is holding these traders back right now? Why is there more liquidity in options? And I guess if you're not trying to trade options instead, what would be a better approach there?
Yeah, I mean, I think, on the user demand, it's basically like what people want to trade, right? And my view, especially right now, is that people just want to express the directional view. It's like, I want to be long or short on certain asset for specific reasons. With options, you have basically more variables, right? You can enable volatility trading, like you can do a lot of things, but I just think that there's more of a niche rather than the mainstream type of adoption, right? So how can we change that? In my opinion, is art. I think people now are so used to and familiar with perps that to let them switch from perps to options, for example, we need to probably rethink options the way they are considered. And I understand them. Like every time I talk to people, even though they're like good traders and they can definitely do options, they're like, hey, I think the market's gonna go up. That's the only thing I want to trade. So I go on 10x leverage, 20x, whatever. I click a button, deal. I don't have to think about expiry strikes or whatever. Which is, even like, again, like good sophisticated traders, they still think that way. So in my opinion, to change that, we probably need to rethink the instrument. The other problem that I see is also in terms of like market making participation. So you need liquidity, and when it comes to options, I think there is no infrastructure in place right now. There are only a few market makers willing to do it. And to let them migrate and start to do options, like it might be expensive. They need to get paid and incentivized and everything. So I think it's basically just not sustainable. So again, probably there might be a way to create a better model. I think we should definitely not stop innovating right now into options, but I think the innovation has to be something starting from zero again. So instead of saying, okay, those are like how options work and this is like how an option exchange is, and we're just gonna put it on chain, I don't think it's enough. You need to rethink from the ground up, like all the liquidity provisioning, the trading experience, and everything for options, in my opinion, at least to get mainstream.
Yeah. Do you think that having an RFQ model kind of helped attract market makers, and how do you kind of think it um, creates price discovery versus how AMMs would create price discovery?
Yeah, I think an RFQ is kind of an easier way to boost up the liquidity, right? Basically, like the problem as a protocol, like at least that we faced many times, is that you're launching a new product and you go to a market maker and say, hey, you would like to integrate, we're not gonna pay you because we want to firstly test this thing, and everyone is gonna be like, no. So the thing about the RFQ, at least for us, it was kind of an easy pitch because it was like, hey, you don't really need a lot of liquidity or a crazy tech or whatever to do that. It's like if you see the demand coming in from users, you just price the way you would like to price. If you get the flow, fine. If you don't get the flow, whatever, it's not a big deal, right? It's not a big resource. So for us, for example, worked. It was an easy way to bootstrap liquidity, but also because our design is very specific. Like we only basically as a buyer, like our market makers are just buyers. So even in terms of capital, it's way more capital efficient because they don't have to basically lock collateral. They don't have any liquidation. They're always long option and they hedge themselves with perps. So that design is definitely like an efficient way. If you do the other way around, for example, you want to long an option, then you need the market maker to lock the collateral, and then you have liquidations, margining. It's gonna be like completely different beast for even like for the market maker. So even in that case, probably the RFQ is not the solution. I think RFQ is the solution that worked for us because of this very specific design. Um, Collateral, for example, from Risk is on chain. So you as a user, you deposit the collateral is locked on chain. No one touches the collateral, is no hypothecation or nothing. And as a buyer or as a market maker, you just pay the premium. The premium goes to the user. You receive this basically option position, and then you hedge yourself, right? So that's kind of like easy way. And we didn't pay any market maker at this point. It's basically just they're in for the flow. So the RFQ worked for us. I guess it depends what design people are thinking and what is the use case, because again, it might be the solution, but I don't think it's the the solution to all the problems of options. I don't think it's just the RFQ that's gonna solve all the problems. In my opinion, to solve the real problems is like get organic demand and make sure that the organic demand is high enough to attract market makers for the flow and not because you pay them. So that's the very hard thing. If you can get that, probably you can have an options protocol that works.
That makes sense. You mentioned that you guys are kind of the only on-chain options protocol out there, and I'm curious to see how you kind of think about or compare yourself to lending vaults and other strategy vaults that accumulate yield for users, and what kind of decision process would go from a user to your product versus maybe using a lending vault instead.
Yeah, yeah. I mean, Risk is it's not the only on-chain protocol, but as like it's the only one that lets you do basically covered call and cash secure puts in a native way, right? So it's kind of like a new primitive. There are other options protocol, and you probably can do a lot of different strategies as well, but like in a very native way as we've done with Risk. So if you want to do a covered call today on certain asset, like as I mentioned, like PTK hype, Risk is the only available way and very easy to do it. Now, how do we compare with like lending protocol? What I've noticed is like, I mean, obviously the yield is a completely different risk reward, right? So the thing about the lending, especially right now with the balls and curations and everything, is like you can get potentially higher yield with looping and all of that. But with Risk, it's like you basically can decide how much risk you want to take from how far you're going to sell with covered call or how far you're going to buy with cash secure puts, right? So what our users like is they can pick basically their risk profile. So they're like, okay, I have hype right now is 29, 30. I don't know exactly right now. Like I'm willing to sell at 32. So get me the yield, I'm selling at 32. So this is something that even with a lending protocol, it's not there. It's not that you really can pick, the level that you can get the yield. Plus, the way our users see that is they see that as a take profit type of opportunity, right? Or buy deeper. Like it depends from the instrument. So what I've noticed is like they use lending for actually like, borrow the collateral or something like that, and then use risk to actually generate additional yield on top and build strategies on top of that. The closest thing, like the closest product that I see like our users doing is actually probably something like Pendle. So they do Pendle and they get yield out of it. And then again, like for example, with the PTKI, they actually put it into risk and so on. So Pendle is probably the closer in terms of user base, completely different mechanism, yield and everything like that. But like our user base is probably a very similar user base to someone like Pendle. Compared to, that's what I mean. What I say, it's not an options protocol per se. Like we don't really have options traders. It's mostly our users are again like people doing Pendle and doing risk, or people doing lending, get the collateral, put it into risk and stuff like that. So yeah, the way that our user think about is more of like, I set a price, I think it's gonna eat it and I'm happy to sell, or I don't think it's gonna eat it and I'm happy to collect yield because of that. Pay me upfront. Worst case, I take profit. That's on the covered call. On the cash secure puts is give me yield on my stable coins, 15, 10, usually 10 to 15% is what I see as an average. Give me the yield. Otherwise, I'm happy to buy BTC, 10%, 15% lower than the current price.
Great. Okay. Yeah, that makes a lot of sense. I'm glad to see options finally being utilized in such a sophisticated and simple way. So congratulations on that and your success. It's great to see, and hopefully Panoptic will follow soon. Thank you so much for your time today and chatting with me. And thank you to everybody for listening. Hopefully you enjoyed this podcast, and have a great rest of your day.
Yeah, thanks a lot, Rosalie, and thanks to the Panoptic team as well for inviting. Have a good one.
Bye.
Thanks.